Dumelang. Let us do or finish this paper over here. I've already recorded question one and question two. Today I'll be doing question three, which is all about your statement of cash flow. So we've got information relating to Lenola Leads Limited or Lenola, I don't know. It is a South African listed company that produce, package, and supply major retail outlets with a variety of electrical cabling solutions. They have an authorized share capital of 5 million shares. Shares were sold on the 1st of March to bring the total number of shares. I don't know if I'll need that information. So we know that on the 1st of March, there were shares that were sold and it brought the number of shares issued to 4,600,000. And they said no shares were repurchased during the financial year. Earnings per share was calculated to be that much. That was weird because from nowhere they just put earnings per share. And then they gave us extract from the statement of comprehensive income for the year ended 28th of February 2023. We've got depreciation, interest on loan, and the tax rate. That is not the income tax, it is actually the tax rate. So we need either profit before tax or profit after tax for us to calculate that tax amount. And this is all we have. Um, Obviously, I've done this paper, all right, and when I was doing it, my answers were not corresponding to what they got because I normally do the paper first and then I compare the answers that I've got to the memorandum. And after going back and forth comparing my answers to the memo, I noticed that current liabilities for 2022 were wrong. That total was wrong. In the question paper, it was given to you as 797,000, and it's not supposed to be that much. The total is supposed to be 1,287,000, which is what you will get when you add all of these here, right? So when you add all of those there, they will give you that value over there. Um, Now I just wonder, because you will have only noticed this mistake if you use the totals. All right, but I'll show you what I mean by that as we go through the solutions shortly. Um, yeah, that is so basically if you haven't done this paper, just make sure that you correct that in your question paper. That was incorrect. And this is additional information. These are the questions that were asked. Okay. So those are all the questions that were asked. This is the IEB May exam 2024. I'll just go straight to the first question. The first question wanted us to calculate the net profit after taxation. Now, we were not given profit before taxation. We were not given profit after taxation. And we were also not given the income tax itself. We are only given the tax rate that goes with the income tax. So when you look at all the information that you've got, you couldn't even use the retained income note to calculate your profit after tax. That is because you will be missing a couple of things. You will have to calculate your dividends on ordinary shares first for this year. And there was no buyback, obviously. And And unfortunately here, they also did not give us the retained income balance at the beginning of the year. So meaning that you were going to have two unknowns. You were going to have retained income balance at the beginning of the year not given. You were also not going to have profit after tax. So it was going to be a little bit difficult for you to get profit after tax. And the only weird thing that you were given here was you remember that earnings per share. If you know your ratios by heart, you will know that earnings per share is, what is it? What is the formula for calculating earnings per share? The formula for calculating earnings per share, it is your net profit after tax. And I also needed you to know that this earnings per share was at the end of the year. It wasn't at the beginning of the year, it was at the end of the year. So you needed net profit after tax at the end of the current year divided by the number of shares issued at the end of the current year multiplied by 100. Whatever answer you will get will be in cents. We were giving earnings per share, which was 700 cents. We were not given profit after tax. I will definitely write that as X. At the end of the year, we were told that the number of shares that were in issue on the 28th of February 2023 amounted to 4.6 million. So our denominator here when we calculate earnings per share will be that 4.6 million. Then you times all of this by 100. Now, you could have just divided both sides by 100. Therefore, you will have 7 is equals to x divided by 4.6. I did not do that. I multiplied 700 with 4.6 million, and then I divided by 100. To find the value of x, remember the value of x here represents your profit after tax. Put all of that into your calculator. I don't know why I didn't write cents next to 100, so the cents can also cancel out. You will get your net profit after tax as 32,200,000. Okay. And now they also wanted us to calculate inventories. I will basically look at this and you will notice that inventories will be under current assets. There it is. And we don't have inventories for the current year. And it's impossible for us to calculate it because we don't have current assets. We also don't have trade and other receivables. So that made it difficult for us to calculate inventories. Because if you were given one of those, we were going to calculate, actually, if you were given both your current assets as well as trade and other receivables, it was going to be possible for you to calculate your inventories. But here it was a little bit difficult, so I needed more information to calculate inventories. And I went to additional information. Obviously, inventories will fall under working capital. So under working capital, we've got three elements, which is your inventories. What is the second one? Trade and other receivables. What is the third one? Trade and other payables. All right. Those form part of your working capital. It's just your current assets as well as your um, current liabilities. But obviously, when you look at current assets, it's just your inventories and trade and other receivables. Cash and cash equivalent is normally dealt with at the bottom of your cash flow statement. Okay. Now, the problem here is that they gave me current ratio. So they said the following financial indicators were calculated on the 28th of February 2023. That date was important, okay? So that I know that these ratios, they apply to the beginning or the end of the year. So now I know they apply to the end of the year. So the current ratio is 1,15 is to 1, and the asset test ratio will be 0,75. Normally, because we are looking for inventories, you will use the asset test ratio. But the problem with asset test ratio here is that you were not given current assets, which made it a bit difficult. So if you were to use asset test ratio, you will not have current assets, you will not have inventories. Do you get it? Um, we know that the difference between these two will be caused by your inventory, but I don't want to get there. I don't want to confuse you. So I will stick to the basics. I can't use asset test ratio because I will have two unknowns. So I am only going to use the current ratio. So the current ratio, formula for current ratio is current assets is to current liabilities, right? And the ratio was given to you as 0,15, which is your current assets, and your liabilities will be 1. And as you have noticed, we were not given current assets. So I will put that as X as a first part. And the second part will be your current liabilities for the current year, which will be 964,000. Where do I get that 964,000? As I've said, that is your current liabilities. There it is. We didn't have current assets as I've indicated. And because of that, I didn't have current assets and current as well as my inventories. That's why I couldn't use the asset test ratio. Okay. Um, now I used normally you will cross multiply. I've taught my students to cross multiply the two ratios and then solve for X. For now, I decided to use the ratios as they are taught in grade 9. I know immediately when I put in X, a lot of accounting teachers will be like, yeah, but now what about students that are doing accounting and maths lit? Why are you not accommodating them? But the thing is, guys, solving for X in accounting, it's actually grade 8 and 9 maths. So even if you're doing maths late, you should know those basics. Okay. So here I'm just going to use the grade 8 math. For me to move from 1 to 964, I multiplied by 964,000. So for me to get X, I'm going to do the same thing on the first part of the ratio. I'm going to take that 1.15 and multiply it by 964,000. And it'll give me X as 1,108,600. Note that this 1,108,600 represents my current assets, which solves my solution. So when you go, I needed only current assets. All right. Um, oh, actually, it's not enough for me to find my inventories. I also need trade and other receivables for me to be able to find my inventories. So I'm just gonna go to the additional information that I was given and check if I can use any other information there. Or point number 2 says the movement of the trade and other receivables resulted in an outflow of cash of 21,200. Now, this takes you back to what I've discussed under the cash flow statement. All right, guys, I do have lessons on cash flow statement. It's from lesson 1, I think, up to lesson 15, where I start from the beginning. Um, it deals with your note number 1, and it also deals with in note number 1 under working capital. I broke it down so that you understand. And I want us to go to working capital and think of what trade and other receivables are. What exactly is trade and other receivables? We know it's an asset, and we also know it's a current asset. But what resulted in us having trade and other receivables? Define what trade and other receivables are. To make it easy for you, trade and other receivables is what is owed to us. It is what is owed to us. So we're looking at debtors. Think about it now. If trade and other receivables last year was greater than trade and other receivables this year, when you look at cash movement, how does it impact on our cash? Trade and other receivables last year is greater than trade and other receivables this year. It means that trade and other receivables from last year to this year decreased. A decrease in trade and other receivables, it means we are owed less. Now, anything that results in us being owed less, how does it impact on our cash? It results in a cash inflow because a decrease in what is owed to us means that the debtors, whoever was owing us, has paid us. So we received money. Do you get it? The inverse applies. If trade and other receivables for last year is less than trade and other receivables for this year, it means that we actually gave more to debtors. So we lost cash, which is the case here. A cash outflow means that trade and other receivables for last year is actually less than trade and other receivables for this year, meaning that trade and other receivables for this year went up by that 21,200. Do you get it? So to get trade and other receivables for this year, you just take trade and other receivables for last year and you add that 21,200. If you didn't hear it, please replay that and listen carefully to what I said. Okay? So trade and other receivables for this year will be 598,800 plus 21,200, meaning that this year's one was higher than last year's one by 21,200. And that is because 21,200 was an outflow. An outflow means this year's one was greater than last year's one. So we lost cash. It's a bit deeper. If you go to all the lessons on cash flow statement, I explained it thoroughly. It's all about financing. It's like I bought something for 20 Rand, right? You come to me to buy that something for 20 Rand. Then I give it to you for 30 Rand. Let's say I'm selling them for 30 Rand. That 30 Rand, I'm losing it when I give it to you on credit. Already I lost money when I bought it, but now I'm giving it to you for free, even though it's not really for free, but I'm basically, I have lost money, but I'm not getting it back by selling it to you on credit. So it's an opportunity cost lost. Therefore, it's a cash outflow. I don't want to get deep to that because now it'll start confusing you, but I hope you understand what I'm trying to say. We good? All right, let's move on. Now, if I look at this table here, for my current assets, I will have my current assets will be equal to cash and cash equivalent plus my inventories, which will be X. Let me just say it's Y in this case because I've used X before. So, so this was X. We got it, right? Which was, I forgot what it was. We don't have inventories. So if I take 103 and I add it with this inventories and I add it with trade and other receivables that we just got, which was this 598,800 plus 21,200, it should give me my current assets, of which we already found, right? We said our current assets was 1,108,600. So our current assets will be made up of 103,000 plus your inventories, which is Y, plus your trade and other receivables, which will be made up of last year's trade and other receivables, which has increased by 21,200, which gives you trade and other receivables for this year. Now, manipulate this. We do have current assets, which is that 1,108,000. How did I get that 723,000? Again, grade 8, guys. You just take like terms, which are these ones, you just add them up, they will give you the 723,000. To solve for y, transpose 723,000 to the left. So you will have 1,108,600 minus that 723,000, which will give you the value of y. And here y represents your inventory. We good. Long, ne? Only for 3 marks. Yeah, you can check the memo. Probably they have a different working out. As I've said, I do my working out first and I only compare the final answers. If our answers are not the same, then I know that between me and the examiner, someone is wrong, and that's the only time I'll investigate. Here it was the same, so I didn't even look at what they had. So I will just say my inventories is 385,600, and that's all I got. We still good? Away. Let's move on. Now they want us to calculate trade and other payables. Oh, this is where I said I noticed our answers were different, and I went back and forth trying to figure out what was wrong. My calculations were not wrong, but there was a mistake in the paper, as I've said, and I ask you guys to correct it before you can even start watching what's coming next. So when I calculated change in payables, I started with the totals that were given to me. I feel like that is a little bit easier. But you could have done it differently. So you could have not worked with the totals. If you didn't work with the totals, you wouldn't have noticed that there was a mistake with the question paper. So if you were not working with the totals, so you're going to compare these two and then compare these two and then compare these two. And then we don't compare interest accrued expense, and I indicated it in the cash flow statement lessons. We do not, we exclude accrued expense if and only if it does not relate. If and only if it relates to interest on loan. We exclude accrued expense if and only if it relates to interest on loan. So we will not include that. And I know someone is going crazy right now and they're asking themselves, but say we've got SARS pay as you earn. Why do you include it? Yes, we do include SARS pay as you earn. The only SARS that we don't include is SARS income tax. SARS income tax. So even if they gave you SARS VAT, you will still include it. The only one that you exclude is SARS income tax, and that is because that one is disclosed separately on the face of your cash flow statement. Similarly, the reason why we exclude that accrued expense that relates to interest on loan, it is because it is shown separately on the face of the cash flow statement. It is under operating, but you need to know that it is the cost of financing. So we show it separately. Tax, obviously, we need to show it separately. It's material. We need to know how much the company has spent on tax. Okay, we good? And then I'm going to exclude SARS income tax as I've indicated. And someone might have realized that they might have included bank overdraft. Because my kids know that they exclude accrued expense if it relates to interest on loan. They exclude SARS income tax, which is what we have done. They exclude shareholders for dividends. So they only know that we exclude three. But here, this is where common sense needed to kick in as well. All those that we are excluding them because they are shown separately on the face of your cash flow statement. And because of that statement, you are supposed to use your common sense and say, oh, I have bank overdraft. Bank overdraft is also shown separately on the face of the cash flow statement. So I also need to exclude it. It's shown at the bottom of your cash flow statement where you say it's a net change in cash and cash equivalent. So we exclude that as well. Okay. Obviously, we will also exclude shareholders for dividends. So basically, if you were doing it per item, you were going to just compare those that I've highlighted. With me, I didn't compare those that I've highlighted. What I did is that I started with the totals. And from the totals, I only subtracted the ones that I needed to exclude. All of those that I needed to exclude, I subtracted all of them. And then obviously I'll be left with those that I've highlighted there. So it's up to you as to which method you wanted to use, but you should get to the same solution. We're good, right? Great. So what I did is this. I started with the totals as I'm indicating. So my total for the current year was 964,000. My total for last year was 1,287,000. Previously, when I did this, it was 797,000. And that's when I noticed that, nah, man, there might be something wrong here. I wouldn't have noticed this mistake here. All right. And then I excluded accrued expense just because it relates to interest on loan. Guys, when you see accrued expense, don't just exclude it. The only time you exclude it is if it relates to interest on loan, guys. Please watch my videos. Do you really want a distinction in accounting? Just watch my videos and do as I say. All right, just do as I say, and I'll guide you to getting that distinction in accounting. Listen carefully to everything that I'm saying. Go to my Google Classroom, download the notes as I'm going through those notes, fill in. That's how you will learn and take notes. Trust me, you'll bring a distinction come Jan. So, interest on loan. I'm going to exclude accrued expense because it relates to interest on loan. Excluding means I'm subtracting it, or meaning that I don't add it if you use the other method, okay? SARS income tax, only SARS income tax will be excluded. Bank overdraft, that is because it'll also be shown separately. And I'll also deduct my shareholders for dividends. These are final dividends for last year and the current year. And then I found my totals. And for this year, I got 491,500. And for last year, I got 818,000. Now you can imagine how stressed I was because according to this, it's a decrease in trade and other payables, it's an outflow. And this is why I forgot to, it works the same way as trade and other receivables. Trade and other payables is what we owe. Remember, receivables is what is owed to us. Trade and other payables is what we owe. So what we owed last year is greater than what we owe this year. Actually, it's less than what we owe. It's greater than what we owe this year. What am I saying? Let me just rephrase that. Trade and other payables for this year is less than trade and other payables for last year. So since it's less, that reduction, what could result in us owing our creditors less? It's if we pay them. So a decrease in trade and other payables is an outflow. So they had an outflow and I had an inflow. So you can imagine I'm like, okay, I didn't just get the numbers wrong. I also got the flow of money wrong. So I was like, okay, what's happening here? And I went through my workings And everything made sense. And I don't know what said, okay, start adding and see if these totals are correct. And now I don't want to say when you go to the paper and you're given the totals to prove that the totals are right, start adding because that is time consuming. And now, what if you get a total that is different to the total that is given to you? Do you raise your hand? What do you do? Um, to be honest, this is one mistake that the examiners, I mean, it has moderators, and I don't know how many they are. This is one mistake that they should never make because now it confuses students altogether. And if you get question three, you wrong, and you started with question three, your whole paper will be messed up. And that is one thing that they should try to avoid doing, not to get anything wrong in the paper. It needs to be moderated thoroughly to the extent that there are no mistakes at all. Now here it gave me an outflow. Okay, but we'll talk about all of these later on. Here they just wanted me to calculate that. The next question wanted me to prepare my reconciliation between profit before taxation and cash generated from operations. Remember, I got my profit after tax, and they also gave me the tax rate, which was 30%. Now, the profit after tax, which was 32,200,000, was already at 70% because it's after tax. After tax means tax has already been deducted. If you don't understand how I got this, please go to my channel and in the search, just type in shares and dividends. I think that's where you'll get more information about the 70 and everything as to how to work out percentages. And also you can check another cash flow statement. I think I did explain it there as well as to how we got to that 70%. So I want the profit before tax. The thing is, this reconciliation note of the cash flow statement, a lot of students confuse it to retain income. And they're not the same, guys. Here it's profit before tax. In retained income, it's profit after tax. Here it's profit before tax. So that's why I'm multiplying by 100. And when I get my profit before tax, it will be 46 million rand. And then you will adjust for depreciation and interest expense. In most cases, those you'll have to calculate, but here they were given to you. So depreciation was 345,000. Interest on loan was 63,400. And we had accrued expense interest on loan. So I'm guessing here interest on loan was not capitalized. There should be more information here. They don't say anything about interest on loan here. Let me just check. Yeah, there it is. The fact that we have accrued expense, it means interest on loan was not capitalized. So these are the things that you need to look out for. And also go back to my cash flow statement notes where I differentiated between interest being capitalized and interest not being capitalized. If interest is capitalized, you use the table. If it's not capitalized, you have to draw the timeline and check how much you owed at a specific point. It's either you took an extra loan or you repaid a loan. So you need to pay attention to that. That is when it's not capitalized. Here you were lucky it was given to you. In certain, if you look at the previous question papers that I've done as well, they will not give it to you. It's either it's capitalized or not capitalized. If it's capitalized, you use the table. If it's not capitalized, remember to draw the timeline and pay attention to the balances and when those balances changed if they're different. And also check my cash flow statement notes to learn more about different alternatives that they can ask this question. All right. I'm gonna move on to adjustments for. I'm gonna add depreciation. That is because depreciation is an imputed expense. It's a non-cash expense. So already it has been deducted from profit before tax. So I'm going to add it because here we are preparing the cash flow statement, which is about cash. Only cash expenses needed to be subtracted. So unfortunately, depreciation is a non-cash expense. We have to add it back so that it cancels out because there's no effect on cash. All right, so the net effect here will be zero because it's a minus plus, which holds depreciation, cancels out depreciation as a matter of fact. We are going to add interest expense. The interest expense that you add here must be the interest expense for the current year, the one that was recorded in the statement of profit or loss. Okay, so pay attention to that. It must be interest expense that was recorded in the statement of profit or loss. That's the only one that you have to add back. The only reason we are adding it is because interest expense is a finance cost. So it is shown, it's required. Materiality requires us to show it separately because it influences the decision making of the readers of financial statement. That's why we add it back here, not because it's a non-cash item. Still going to deal with it, but separately on the statement of cash flow statement. So when you take your profit before tax of 46 million rand and add 345,000 and add it with 63,400, give you operating profit before changes in working capital of 46,400 and 8,400. Okay. And now we're going to go back to our inventory. Remember, we calculated inventory for the current year. We were given inventory for last year, which was 679,000. And our inventory for this year was 385,000. You still remember that? So you will notice that our inventory went down. So if your stock goes down, how does that impact on your cash? The other answer, it means you sold. So it's a decrease in your inventory here. So that's why I cancel out the increase. It's a decrease. A decrease means you sold. So the difference will be a cash inflow. When it comes to receivables, receivables for last year amounted to 598,000, right? I forgot what it was, but already it had gone up. So there was an increase in receivables and an increase. That difference was an outflow, and you were told that it's an outflow, so you didn't even need to stress about it. It was an increase. With payables, we just calculated them in the previous slide. Payables for this year are less than payables for last year, so that will be the difference will be a cash outflow, which will be 365,000. 326,000 actually, 500. Then take 293,400, subtract 21,200, subtract 326,500. You will get a net change in working capital of 54,300. The next question, they wanted us to calculate interest paid. Interest paid, because here interest was not capitalized, you will start with balance at the beginning of the year, which was under current liabilities as an accrued expense. It was owed last year. So this year we need to pay it. So it will result in a cash outflow for this year. Interest expense that comes from the statement of profit or loss, or i.e. the income statement or the statement of comprehensive income. The one, your actual expense for this year will result in a cash outflow. But unfortunately, or must I say fortunately, do have accrued expense which relates to interest on loan. Accrued expense is what we still owe whoever we owe that interest to. It means we did not pay it. So it did not result in a cash outflow. Instead, it saved us money since we did not pay for it. So do your workings there. Minus 9,300, minus 63,400, plus 14,100 will give you interest paid, which will be 58,600. Dividends. I showed you dividends earlier on. For the last year, it was 420,000. You put it in brackets because it was owed last year. Now, for this year's dividends, I only had the final dividends, which was found in trade and other payables, which was shareholders for dividends. It is at 437,000. But I don't have interim dividends for this year. I do have profit after tax, but I don't have balance at the beginning of the year. So again, here I can't even manipulate because I have two unknowns. I will not have balance at the beginning of the year of retained income. I will also not have shareholders for dividends. So it'll be impossible for me to use that as well. But let's see what they gave us, okay? With respect to dividends, they said interim dividends of 8 cents per share was declared and paid on the 31st of August 2022. Remember, the beginning of the year was the 1st of March 2022. So I need to figure out on that 31st of August 2022, how many shares were in issue. And I'm going to go back to the information that was given to me in the first page. So the last movement in shares was at the beginning of the year. And after that movement, where we sold shares at the beginning of the year, after we sold those shares, there was no share movement. So for the entire year, shares issued amounted to 4,600,000. So to get my interim dividends, I'll just take 8% and multiply it by that 4,600,000. It will give me my interim dividends. Now, I used the long way and the short method. You will decide which one you want. And if you have watched all my videos on cash flow statement, you will know what you need to do. So dividends on ordinary shares are dividends that you have declared and paid in the current year. It is the ones that you get in your retained income, which will be this year's interim dividends plus this year's final. But now we've don't have this year's interim. We only have this year's final, which was 437,000. So your dividends on ordinary shares will be made up of your interim, which we need to calculate. It'll be 8% of that 4.6 million, and then you will add it with this year's final dividends of 437,000. And that should give you your dividends on ordinary shares. So dividends for this year will result in a cash outflow, and we will add back final dividends for the current year, which will be that 437,000. But when it comes to your dividends, we are simply going to subtract the ones for this year. All right, so that will give you your dividends paid. Another way of finding these dividends paid is just by taking this year's interim dividends, which will have been 368,000. So that 368,000, I found it by taking 4.6 million and I multiplied it by 8%. Now, when you add it with last year's final, so that is final previous year, interim current year plus final previous year will give you dividends paid for this year, which will be 788,000. So everything that is paid or an outflow, I put it in brackets because I just want my kids to just remember that, okay? That we always put it in brackets. So you can check my Instagram page. I did post a summary on cash flow statement. You can also check on Google Classroom as well. I did post a summary of your cash flow statement as to how you calculate each element of your cash flow statement, including this taxation paid, okay? So how do we get this taxation paid? You will take balance from last year, and this is where you need to be careful. You need to check where you're getting your balance. If we had taxation paid from last year in trade and other receivables, we are receiving that money this year. If we had taxation paid from last year in trade and other payables, we are paying it this year. For this one, it was in trade and other receivables. And when you look at 2022, source income tax was 15,900, and it was in trade and other receivables, meaning that this year we will receive it because it was owed to us by source. Then you subtract this year's income tax, which you will find by taking your net profit after tax of 32,200,000. You multiply it by 30, you divide it by 70. Multiply by what you want, divide by what you have. And as I've said, if you don't get this, please watch all my videos on cash flow statement, including videos on shares and dividend. That's why I explained it thoroughly. So your income tax for the current year, you will put it in brackets. It'll be 13,800,000. Then you have to check, where's SARS income tax for the current year? SARS income tax for the current year is in trade and other payables. It means that it was not an outflow in the current year. We did not pay it. So it'll be an inflow. If it's in trade and other payables at the end of the current year, it'll be an inflow. If it was in trade and other receivables at the end of the current year, it would have been an outflow, as it would have meant that we overpaid SARS. Also, check a video on adjustments, income tax, and provisional payments. That's why I explained that thoroughly. If you're a fan, you should get a distinction come next week or next of next week. Okay, because I've explained everything. Yeah. So do your calculations here. Your taxation paid will be 15,900 minus 13,800,000 plus 21,400. It'll give me taxation paid of 13,762,700. The next question, they wanted me to determine cash flow from investing activities. I read a little bit about that. It was on tangible assets where they said during the year, the company purchased the new equipment. They didn't give us what the cost price of that new equipment was, but they told us that the company sold an old equipment at its carrying value of 373,000. Actually, now that I'm thinking about it, that is a giveaway. I will take it here. Okay, I didn't do that, but I should have done that. I will take it straight here and put it there as disposal of tangible assets or disposable um, of tangible assets or tangible assets sold. And I will put it there as 373,000. I did not do that. Instead, I wanted to find the equipment that was purchased. And that information, I got it from here. I was given carrying value of tangible assets at the beginning of the year as well as the end of the year. When you are given carrying values like this, you need to remember your tangible asset note. You need to remember your tangible asset note. Remember, your tangible asset note is divided into three sections: the beginning of the year, the movements for the current year, and the end of the year. So you take carrying value at the beginning of the year, which is that 2,652,000. And then you deal with your movements. So it'll be balance, which was that carrying value at the beginning of the year. If you had any additions, now I'm getting to movements. Under movements, we only have three things. Do you still remember what they are? It's additions at cost, disposals at carrying value, depreciation. Additions at cost, we would add it, but it was not given to us, so I'll put it as X. Disposals at carrying value, it was given to us. Sometimes you might have to calculate it. It was that 373,000. You put it in brackets. Depreciation was also given to us. Remember, we got it from the extract from the income statement. So you will put it in brackets here, which will be 345,000. Then we were given carrying value at the end of the year. Carrying value at the end of the year was 2,937,000. Now to get X, To get X, you will take that carrying value at the end of the year, add it with everything that you subtracted. That will be added with depreciation, added with disposals, and subtract what you added. So you will subtract that 2,652,000. It'll give you the value of X as 1,003,000. This is additions at cost. Additions means you purchased. How does it affect your cash? Obviously, in your tangible asset, we don't put it there as negative, but in the cash flow statement, we put it as negative. Why? Because we bought. When you buy, you take money out of the business. It's a cash outflow, people. It is a cash outflow. All right. And then I will put in tangible assets sold, which will be that 373,000. And the only thing that I can have here is our investment. So far, investment will be a fixed deposit. An investment is us having invested our money elsewhere. Here, it looks like we invested our money in Tato Limited. So we bought shares. So understand that one company can buy shares from another company. So the shares that it buys from the other company, it means this company is a shareholder. So whatever value of shares they have in the other company, they see it as an investment. To them, it's an investment. Like to us here, that those shares that we own at Total Limited are just an investment. So the higher the investment goes, it means we took our money and we are investing more. So it's a cash outflow. If our investment goes down, it means we took our money um back, meaning that we sold shares to that company. We sold back shares to that company. And when we sell shares to that company, they will give our money back. So that will be an inflow. And here it means that Tata Limited gave us our money back. So for you to remember it, if it's stressing you right now, a decrease in investment is an inflow. An increase in investment is an outflow. If you don't want to stress up yourself about why is it an inflow outflow, but if you want to know, I've just explained it to you. So here it was an inflow because we reduced our investment. I would like to find out why. Oh, there it is. Financial assets. It says during the year, the company sold some of the shares it had in Tato Limited. Note that those shares from Tato Limited's side, they will take them as buyback of shares. So meaning that they pay us. They are buying back their shares, but they are paying us. So it's an inflow to us. And the reason why we sold back those shares was because Tato Limited was not giving us dividends. Guys, it's useless for you to own shares in a company that doesn't give you dividends. Remember, dividends are simply a sign of return on your investment. Check out financial analysis as well, videos on financial analysis. Guys, this channel is a dictionary, it's an accounting dictionary of how to get a distinction. All the questions that you have, the answers are in one of the videos that I recorded. And don't ask me why I'm not getting 10 distinctions. Ask my students. They'll probably blame me. But I'm giving them everything. Here it is in the classroom, and here are the videos. Fail at your own risk to get a distinction. Okay. Um, so that I'll just put it here. They're not like us. Investment matured in essence. That is because we basically um we decided to sell back the shares. And obviously that 230,000 will be paid to us. The net movement here will be minus 400,000. So it was that negative 1,003,000 plus 373,000 plus 230,000. So that's how I keep that negative outflow, cash outflow of 400,000. The last question, finally, I'm going to do it this way. I don't know how they did it in the memo, but I'm trying to keep things as simple as that. Again, check videos on my on cash flow statement. I also discussed this. This is the bottom of your cash flow statement where you have balance at the beginning, balance at the end, and then net change in cash and cash equivalents. So when I look at my statement of financial position and I look at cash and cash equivalents, this is all I've got there. So I'm just going to put them here as they are. Okay. I'm just going to put them here as they are. Here they are. All right. Um, but I always say to my students, okay, hope they listened. Um, you don't just look at cash and cash equivalent. You always have to be on the lookout for bank overdraft. So you must always check what you have under current liabilities. Need to check if there's any bank overdraft there because that is a cash and cash equivalent. It doesn't affect your trade and other payables, but it's a cash and cash equivalent. And I remember seeing it. It was that 39,700. You still remember it. I said we're gonna show it at the bottom, and that's what we're doing. We are at the bottom, right? And it was for last year, so I will put it as negative for last year because it was a bank overdraft. Okay, so I'll show it as a negative for last year. For this year, we didn't have bank overdraft, but for last year, we had a bank overdraft. It will be a negative bank balance, which is an overdraft. So get your balances here. So for this year, it will be 103,000. For last year, it will be 35,400. To get the net change in your cash and cash equivalent, you will take this year minus last year. But when you take this year and minus last year, it will be 103 minus negative 35,400, which will give you a positive answer of 138,400. And this will have been a cash inflow. I hope that knowledge flew into your brain like water. Hope you enjoyed the lesson. Yeah, it's like I'm teaching. I'm pretty much standing. It's like I'm in my class right now, teaching it to you. Right. Hope you enjoyed it. Okay, go get that distinction. Do more papers. And thank you for your support. I really appreciate it. When you watch the next videos, please remember not to skip ads. That's the way I get to earn some money. Thank you again for your support. Check out my LinkedIn, check out my Facebook, check out my Instagram, and more than anything, I actually prefer for you to check out the Google Classroom. That's where you will find all these notes as well as past papers. That's me, Refill Ready Jamela. Kgotso.